Hello everyone, it's Friday, September 5. Today we're analyzing the euro and British pound charts to gauge potential market moves. Yesterday, the US dollar notched modest gains against the euro, the pound, and other risk-sensitive assets, buoyed by upbeat data on services activity. The ISM reported its services PMI at 52 in August, above expectations of 50.9. Still, the rally quickly lost steam as traders shifted focus to today's US jobs report. Many believe that the release is unlikely to lend much support to the greenback. Let's go straight to the macroeconomic calendar. Today, the spotlight is on US non-farm payrolls, a key report expected to shape the Fed's next policy move. Economists forecast payrolls to rise by just 75,000 in August, following a major 73,000 gain in July. A print below estimates, especially under 100,000, would signal continued labor market weakness under the strain of high interest rates. This would reinforce expectations for a rate cut at the third September meeting. By contrast, a reading above 100K, the last time seen in May, could prompt the Fed to delay cuts, opting instead for a wait-and-see approach. However, this scenario appears unlikely. Also in focus in the US, unemployment rate projected to climb to 4.3% from 4.2% in July, compared with 4.1% in June. Such an increase would provide an additional signal for monetary easing, something the White House and Donald Trump have long pressed for. In this case, the dollar would likely weaken, while the euro and pounds tend to make solid gains. Turning to euro area data, today's calendar features second quarter GDP. The bloc's economy is expected to have grown by just 0.1% after a 0.6% surge in the first quarter of 2025. Weaker than unexpected numbers could pressure the euro, though they are unlikely to alter the broader market picture ahead of key US jobs data. As for the UK, it has already reported retail sales, which rose 0.6% in July, beating forecasts of a 0.2% increase. Sterling, however, reacted with only modest uptick as traders kept their focus firmly on upcoming US labor market report. Now let's turn to technical analysis. On the 1-hour EUR USD chart, a false breakout at 1.1645 would generate a buy signal, sending the euro towards 1682. A breakout and firm consolidation above these levels could extend the move to 1.1713, while weak US labor data might open the way to 1640 and even 1781. At the level of 1781, short positions on a rebound will look attractive, targeting a 25-30p pullback. Short entries at 1.1682, 1.1713 and 1740 should only be considered in a case of a false breakout. Overall, if US statistics spark strong euro gains, it would be safer to look for long opportunities rather than shorts. Buying the dip would be relevant at 1611 at 1645 on a false breakout. In the event of a sharp decline, long entries on a rebound would also be justified at 1.1576, aiming for an intraday correction of 25-30 pips. Speaking of the British pound, as noted earlier, traders responded to update UK retail sales data with fresh buying. A move back below 34.54 would create a selling opportunity targeting 34.16 and 33.80, with a more distant target at 1.3341. However, this level could be reached on the back of strong US jobs data, where long positions on a rebound would be justified, aiming for a 25-30 pip correction. Conversely, a breakout and consolidation above 34.54, which is quite possible in early trade, would open the way for additional long positions, with upside targets at 34.85 and 35.15. The more distant targets would be 35.48 and even 35.87 if US data disappoints. At this level, I would recommend going short looking for a 25-30p pullback. Short positions at 34.85 and 35.15 should be considered only on a false breakout, which remains a likely scenario ahead of US statistics. Good luck and enjoy the weekend.